Hi everyone, my name is Memory Bartlett. I am the CEO of the Fountain Valley Chamber of Commerce, and as promised, I am bringing you information today on the loans that are currently available to small businesses through some of the recent acts that have come out of Congress. First, we will be talking about the SBA loans. These came out of H.R. 6201, the Families First Coronavirus Response Act, that was signed into law 10 days, 2 weeks ago maybe. They are very low interest rate loans. We're talking 2.5%, and they are available through the Small Business Administration. You can actually apply online at sba.gov. These loans are a simple 3-step process, and I heard that funds up to $2 million can be accessible within 7 to 10 business days. It is meant to provide you immediate relief for a low fixed interest rate. Now, more importantly, in my opinion, are the PPP loans. It stands for Payroll Protection Plan, and I believe that that is more, in essence, what it is, a plan rather than a loan. And you'll see why in just a minute. This came out of H.R. 748, the CARES Act, that was just signed into law last Friday, March 27th. And it provides loans to small business for the express purpose of keeping employees working. You see, they have to put money into unemployment if we are laying off workers because we are being asked to social distance. That money is being given. What if, instead of processing it through unemployment, they gave it to the small businesses to keep their own employees on, and those small businesses able to maintain, hopefully, fingers crossed, a few more months until this is behind us. It includes, these PPP loans include debt forgiveness. That is not a joke. That is not a scam. That is exactly the intent of this payroll protection plan. There's a little bit more details that go into it, and I'm going to explain those in just a minute. And in my opinion, another great feature is that there's no early payment penalty. So if you get back on your feet once this virus is past us, keeping our fingers crossed, you can actually pay it right back and not have to live with all that interest rate and those monthly payments. So, what are your options? In my mind, there are some other ones out there, but in my mind, there are two great options that you really need to kind of be looking at. And they have come, like I said, out of these two recent acts. So, the first one, again, is SBA loans. And you can apply for and are approved through the SBA. I want to talk about some of the differences here now. They are a fixed low interest rate loan up to $2 million. Now those are essentially regular new business loans. They're being expedited and the interest rates are being lowered because of this health crisis, but essentially every other aspect of them is a startup or a new business type loan. The same process, the same logistics, okay? Now, your PPP loans, the Payroll Protection Plan, is out of this latest act, and you will not necessarily apply for this at the SBA. You will want to go to your bank or financial institution and apply for these loans. One of the many wonderful things about it is that there is no guarantee necessary. You don't have to put your house up. You don't have to put your name on the line. These are being done by the government because of this crisis. And this is especially to help small businesses keep their employees working. Okay, now, again, it does include debt forgiveness. The SBA loans do not include any type of debt forgiveness, and most of them do require some type of collateral or guarantee. Now, with the PPP loans, there is some added paperwork that you are going to have to do. Because again, this loan is meant, especially the debt forgiveness part of this loan, is especially meant to go to your payroll, to go to keeping your employees employed so that they don't file for unemployment, essentially. So how does the PPP work, and what would it look like if you were to go and apply for one and get it? Let's look at a quick example. Okay, first you need to know how much you should borrow. And there's actually a formula to help you figure this out. You want to take your annual amount that you pay every year in wages. For this example, I have used $250,000. Okay? You want to take the annual amount you pay in health insurance benefits for your employees, your portion of that. Again, for this example, I've used $12,000. And you can include any amount that you pay in retirement match benefits for your employees. And in this example, I have used $8,000. So if we added up the wages, your portion of the health insurance, your portion of the retirement match, in this example, we come up with $270,000 annually. Now, let's divide that by 12 months, and we come up with $22,500 basically a month. If we multiply that times 2.5, which I believe they have given us that number because they assume that is how long this crisis will last, and maybe how long we will be affected by the health orders, stay-at-home orders. That's my thinking. So if we multiply the monthly amount of $22,500 times 2.5, we come up with $56,250. Now, if I was applying for a payroll protection plan loan, I would be asking for $56,250. Why? Because that is how much my expenses that qualify for the debt forgiveness portion equals. So I know that if I can provide proof that that is the case, I won't have to pay that money back. They are essentially giving me, yes, free money. They're giving me $56,250 to keep my employees working through this crisis. Okay, now let's take it a step further and see what does that look like for my company, let's say, in the next 3 or 4 months. If I look at it and I list my rent and insurance, the money I pay in wages, and the money I pay in payroll expenses, which includes health insurance and retirement match benefits, I come up with $26,100 a month. That looks pretty similar to the monthly amount on the previous slide, right? Slightly higher, because in the previous slide, we were not including rent and insurance. Okay, so if we multiply that times 3 months, we come up with $78,300. We took out a PPP loan for $56,250 that we are not going to have to pay back if we can supply the documentation to prove that that is what we spent in the expenses listed on the previous slide. That means that for 3 months to operate, it will cost me $22,050. Now, if I have that currently in the bank, I can use that money, borrow through the payment protection plan only what I know is going to be forgiven, and squeeze my way through these next 3 months. There is a light at the end of the tunnel, I promise you guys that. Now, if you don't currently have that $22,050, you can add that in to the money that you are borrowing. But that portion, the $22,050, will not be part of the debt forgiveness plan. That's okay. If you need it, you need it. You're only going to be paying back that $22,050 in a low interest rate over many years the payments are going to be deferred till the end of the year anyway. So you can see now how important this payroll protection plan is. It is essentially free money the government is giving you because you own a small business and you employ Americans workers. They are giving you free money to help you pay those workers and keep your company afloat. Do not miss out on this opportunity. I can't tell you enough. Do not miss out on this opportunity. You'd be missing out on free money. And it's not taking advantage of the system. This is not a cheat. This is not a workaround. This is what the program was designed to do. Again, you could lay off your workers and they could collect unemployment, or the government could essentially give you the money to keep your workers employed. So they have figured that out, and I am grateful. Begin talking to your bank today about these payroll protection plan options. Part of what is going to delay this process a little bit is that the banks themselves may not even know what to do at this point. They are being told by the government, you have to give this money out. You can't ask for a guarantee. And the debt's going to be forgiven because we're going to pay for it. And they need to come up with the processes. So, again, this law was just signed into effect last Friday, March 27th. They have 15 days from then, which I believe is April 12th, to get it going. So beginning on April 12th, this money will be available. And I urge you to begin talking to your bank and other financial institutions now to find out what those processes look like and kind of get a jump start on it. This is a huge deal, the likes of which I've never even heard of. And even though $350 billion seems like a lot of money, it really isn't. So you want to make sure that you are online to get the payroll protection plan with debt forgiveness before the money runs out. That's why I'm trying to get you this video early. And by doing so, I'm trying to provide you with the information that you need to then go and talk to the banks yourselves. Unfortunately, I don't have those next steps. The banks probably don't even have those next steps. So I wanted to get you this information, and as soon as I know more about those processes, I will bring you more information. Remember, go and get your free money. If you have any questions or need any other assistance, please contact us. We are here to help you. You can find us on the web at fvchamber.com. Thanks for watching. I will see you next time. Bye.